This is not financial nor professional advice. This video is for entertainment only. Hi, stock investors. Have you felt like you're on a roller coaster in the market lately? It's sort of like May of last year. Since May of last year, we've had this long, slow climb up the roller coaster. And as we keep approaching the top, we keep wondering how it's going to be when we get to the top, or when, at least on a roller coaster, you know when the top is. This is like going up a roller coaster, not having your eyes open, and basically getting ready for that big swoosh down the other side. Only with stock investing, we don't want to experience the big whoosh on the other side. But even since then, it's been loops and turns and spins and curls. And late last week, we had a large downturn. We went down the roller coaster, and then we ended it with a spike up. So the question is, are we going to level out now, or are we going to do another slow climb, or are we going to plunge down before we go up again? I think I have some stocks that'll help us weather these uncertain times because we don't know what's going to happen for sure. I want you to hear what Ellen Hazen has to say about inflation and what's likely to happen. She sees big banks as being a good investment. And I think it's because of inflation. Banks do better during inflationary times. I think she's right in the short term. I think Kathy Wood is right in the long term, in that technology tends to be deflationary in the long term, but it is in the long term. And in the short term, I think we're dealing with so many supply problems. Let's hear what she has to say.
And then the final reason that we think you need to be selective is that the equity market has been going through a rolling rotation all year long. First, we had the reopening plays doing very, very well, but that only lasted just over a quarter. And if you look at the second quarter and especially the third quarter, you've seen growth reassert its dominance, but then it's reversing again the last few days. So what we think you need to own in a time like this are companies that benefit from inflation. And
she describes exactly what happened with the market. We've just been through this choppy roller coaster, and it has not been fun.
And benefit from rising real rates. And those are going to be financials, real estate, real assets. But we're cautious into the rest of the year.
Okay, so you just outlined for us some places investors might want to be here mid-cycle, given the trends that you just ticked off. Can you get specific with us? Tell us which stocks within those groups you like right now?
Exactly the question I had.
So within financials, we like the banks because the yield curve has been steepening. As you know, the yield curve was inverted a year ago. And now it is up to 125 basis points between the 2 and the 10-year. And so large cap banks tend to do very well with a steeper curve. We like the high quality companies, JP Morgan, Bank of America. In both cases, you have fairly inexpensive valuations on price to earnings, with both of them trading around 14 times. And on price to book, they're sort of fairly valued at 2, maybe 2.5 times price to tangible book. But they're growing earnings high single digits, low double digits. So within the financials, that's what we like. We also like.
She gives such a nice summary of the situation with the banks. But I wanted you to notice that the two banks she recommends are Bank of America and JP Morgan Chase. And I'm going to be talking about Bank of America and giving you some history on it so you can put it in context as to where it's been and where it's likely to go. I just think it's such an iconic American bank that it's a good bet for the future. Bank of America started in 1904 with A.P. Giannini, and he was an Italian American. And the Bank of America was originally called the Bank of Italy, okay? And there was massive discrimination against Italians. This seems unbelievable now, but there was massive discrimination against Italians in the 1920s. And he was one of the few people that would lend money generally, or at least not rate them down, and would lend them money. And this was particularly important in 1906. The Bank of Italy loaned money to people suffering from the San Francisco earthquake. And Bank of America was critical during that earthquake because they loaned money to the city, which allowed it to rebuild San Francisco. So right from the very beginning, Bank of America, it turns out to be very important in our history. And then it just continues on doing one iconic thing after another. In the 1920s, Bank of America changed its name from Bank of Italy to Bank of America. In 1932, Bank of America provided funding for the Golden Gate Bridge, one of America's greatest sights. In the late 1930s, Bank of America was extremely important to Walt Disney. It provided the funding for its first films like Snow White and the Seven Dwarfs, Bambi, and of course, Pinocchio. Bank of America loaned the money for Disneyland and also for Disney World. Bank of America issued the first credit card in 1958. It was called Bank AmeriCard back then, but it eventually became Visa in the 1970s. During the 1990s, Bank of America acquired all kinds of banks. It acquired banks sort of like it was a stamp collector. In 2008, Bank of America acquired Countrywide Mortgage Lending for about $4 billion. This was kind of a very troublesome time because it was right after the Great Recession had started, and Countrywide had made a whole bunch of subprime mortgage lending. And they lended money to people who really didn't have a good enough credit rating to sustain their payments on their houses. So when the recession hit, all these mortgages went into default, which is why we had the Great Recession. And Bank of America had to pay penalties, but it mostly was leftover stuff that Countrywide mortgage lending had done. But they had to pay the penalties, which was quite expensive for them. But they're big on mortgage lending now. Bank of America's biggest and best deal might be their purchase of Merrill Lynch in 2009 for $50 billion. You can see how smart they are. The Great Recession hit, and the price of Countrywide mortgage lending and Merrill Lynch both went down, and they bought on the crash. They didn't buy on the dip, they bought on the crash, which fundamentally is probably the best time to buy things. And to some degree, I fear a crash, but I just want to make sure I get out of it before it absolutely crashes, because I know from my previous experience, after 2004, 2005, 2006, and there was kind of the best time to get back in the market after the dot-com crash. And after the 2008 crash, getting back around 2009, 2010 was a pretty good time to get back in. It's almost, the trouble is you got to wait till it hits the absolute bottom, and I never hit the exact bottom because I always wait for it to uptick, 2 or 3%. So I don't want to hit the exact bottom. I just want to make sure I'm on the uptrend. I just want to make sure I'm on the right side and make sure that the uptrend has truly started. Looking at the chart, we can see that it's a $362 billion company that's gone up from the 20s into the 40s, and it's predicted to have a continued ride upwards, both on a short-term and long-term basis. VectorVest gives it the green light on upside potential, safety, and the timing might be right. So it gives it an overall buy rating, which I think I may do. If this video has given you some good information, please like and subscribe so that you receive future videos. good luck into the stormy weather that we're proceeding into. It's got to get better, right? Eventually.